Another big day on Tesla and I made $32,000. I actually took similar kind of setup 2 weeks ago while on vacation in Philippines. I was there for around 9 days. I did not even take my laptop along with me and I was able to execute on similar kind of setup making $35,000 just using my phone and iPad. I just took my iPad along with me because I wanted a vacation, but I still made $35,000 because these are the A+ setups we traders live to trade. Very easy money trades, and that's why I think I need to make a video on this setup because the risk to reward is exponentially high. Let's start with the monthly chart of Tesla, guys. So in the month of November, we had the elections. Trump won the presidency. Elon Musk, he's a close friend of Trump, and that's why when the results came out, Tesla had a huge rally towards the upside. I was able to score really good amount of money on Tesla. I had 18K, 18K, then 20K, then I made 35K on vacation, then 32K recently. So overall, I have made more than $100,000 just by trading Tesla in the past 4 to 5 weeks, which is amazing. So we can see in the month of November, we had a huge big green bar. So we had a monthly breakout. We were making a triangle right here, had a nice breakout in November. So now this trade that I took this week, we need to mark the high of this month because this is a monthly breakout, right? So in the month of December, I need to mark this level, which is 361.93, which is the high of the month of November, which is very important. Now let's take a look at the weekly chart. On the weekly chart, we can see that this was the election week. We can just see that on the election week, we had a crazy breakout towards the upside with high volume. And after that, we just moved from 245 all the way to 358, 360. So we found resistance around $360 level. And on the volume analysis, had a push towards the upside, high volume, the volume died down. So this looks like a really good consolidation before the next push towards the upside. On low volume pullback, high volume breakout, followed by another breakout. This is the basics of price action, guys. Like we have momentum move towards the upside or downside, then we consolidate on low volume before the next push up or the next push down. I was ideally looking for a push towards the upside. So the monthly chart looks really good. The daily chart, the weekly chart looks really good. Now comes the daily chart. So the first trade, I was on vacation on the week starting 16th or 18th of November, which was a Monday. We can see that this week, I did not take any positions on Monday. I was traveling Tuesday, Wednesday, Thursday. I was it was around the end of my vacation on Friday. I was just watching Tesla. It hit my alert. I took it for the break of 348 towards the upside, held it all the way to 355 with 100 contracts. On this day itself, you guys can actually follow my Instagram. I posted my entries and exits on my Instagram as well, which I'm going to link in the description box below. I entered 100 contracts the following week expiry. Not the same day expiry because I was on vacation. I was trading off my phone. So the same day expiry can be very tricky to trade, especially if I am not able to execute very, very quickly using my hotkeys. So I was just trading off my phone. Next week expiry, and I still made $35,000 on that trade, right? So again, the link will be in the description box below with my entries and exits that I posted on my Instagram. Monday had a consolidation day. Tuesday, just a doji day. Wednesday, we finally pushed towards the upside. So now it looks really good for a breakout above 360. That is the setup I'm looking to trade. This is called the daily range breakout setup. That means that we have formed a range between, say, 330 to 360 for the past 3 weeks approximately since this rally towards the upside. So now if we get a breakout above 360, I'm going to be watching it for a push towards the upside. Now, if you ask me, why not on this day? This was also a good $360 level. Like this was looking good for a break towards the upside, but there was no continuation move towards the upside. So now had you taken this trade, yes, it would have been a losing trade, a red trade for you, but risk management needs to be there. I think I took this trade on this day. I lost money on it, but again, risk management needs to be on point. So now coming to Thursday, we were opening right near $360 level. So the setup, as I mentioned, is a daily range breakout. This is the range we were forming for the past 3 weeks. I'm looking for a breakout of this range and the entry criteria. So this is the setup, daily range breakout. Now, where to enter? Because we were having a chat in the Discord group that how did you enter right off the market open? So in my playbook, this is a playbook setup for me, daily range breakout. In my playbook, I have an entry criteria called open exception. That means if I'm looking for a daily range breakout and if the market open is right at the level that I'm watching, that means I was watching $360 level and Tesla opened at 359.87. That was the open of the stock, 359.87. So it's opening right near 360. In this case, I'm allowed to enter right of the market open. If it's not that case, I have to wait for the first 2, 3, 5 minutes, or maybe at least the first 1 minute of the market open. I entered my position right at the market open, held it all the way to 373, 374. I practically caught the high of the day. So now, how did I catch the high of the day? That is also very important. Entry, I explained. I have an entry criteria called the open exception. The setup, I explained, daily range breakout. Where to exit? So now let's go back to the weekly chart. On the weekly chart, we can see that the last time we were trading above 360, 370 was in 2021 and 22, right? So now I don't want to mark levels under 360 because I'm looking for a breakout. But above 360, we only have a few levels. We can see that the high of this week, which is 373, is equal to the high of this week, 371.87, similar to the high of this week, 371.6. I even mentioned this in the pre-market webinar in the Discord group, is that if we get a good break towards the upside, I'm going to be looking at 372 to 373 zone as my ultimate profit target. And after that, we directly have 384. 384, it can happen, but I can't expect that to happen. Why? Because the ATR, this average true range of this stock, this is the weekly true range. If I go on the daily chart, the daily true range of this stock, ATR, is 15.9. Average true range of this stock on the daily chart. That means it moves approximately $15 to $16 on an average on a daily basis. So if we get a breakout above 360, and if it moves the ATR, that puts us around 375. And if you look at the weekly chart, these are the levels, 373 to 375 zone. So 373 to 375 is my ultimate profit target. If I get anything on top of that, that is a bonus. But that is my strategy. If we get a good breakout, I'm going to look for my exits above 370, 373, and 375. That is my ultimate profit target. And that's where you have to mark your levels. But then I don't understand when people say that it's going to go to 385. Like, it can go. It might take 2 days. But in 1 day, from 360 to 385, which is 25 points move in 1 day, can it happen? Yes, sometimes market has a way of surprising you, but you can't base your strategy on market surprising you, right? So I have to be realistic with my expectation. So I was like, if we get a breakout above 360 with high volume, we can at least move the ATR, which puts us right around the weekly resistance that we held in 2021 and 2022. Now here's the 1 minute chart, guys, and let's take a look at my entries and exits. I'm going to show you guys my TradeZilla as well, where I entered and where I exited. So I entered my position right around 360, and my entry was at 9:30 a.m. 20 seconds. That is within the first 20 seconds of the market open. And why did I enter right at the market open? Because a lot of members in the Discord group, they were asking, like, how did you enter at the market open? I entered 100 contracts, which was a big size. Yes, my risk is it's not like I was risking $500 on 100 contracts. No. I made $32,000 on this trade, but had this position went against me, I would have exited maybe around 359-ish, and I was willing to risk $5,000 to $6,000 on this trade. That was approximately 14 to 15% of my investment, 13 to 14% of my investment, which I was willing to put in. I can't expect to lose $100 or $500 of the market open and invest $40,000. No, when you're trading options, that's what, like, you need to expect at least 10% loss of the market open. On the higher end, on the safer end, it can be 15 to 20% as well. So in this case, my risk was around $6,000 and I made $32,000. So that is about 5R risk to reward. That means my reward is 5 times the risk I put in on this stock. I entered my position right here. I covered my first position at the break of 366 because that is like 5 points move quick towards the upside. So I was expecting a bit of a pullback. I even mentioned that in the Discord group in the live chat that I'm going to look to add to my position. I'm going to show you guys the Discord group a bit later. But yeah, so I covered 50% of my position out right here. I covered maybe 10, 20 contracts right here. But yeah, so my last, I would say 20, 30 contracts, I held it all the way to the break of 373. So that was a weekly level we talked about. We can see that we tested that level, went back down, tested that level again, fake out, tested that level again, above 375. We broke above 375 briefly. It got rejected. We had a doji on very high volume, a sign of reversal. We might actually not go towards the upside. So yeah, you guys can see this weekly level from 2021 and 22, this level respected, today itself, and this was approximately the ATR range from the low of the day. The low of this day was 359.50 and the high was 375. So it approximately moved $16 for the day, which we can see the daily to range was $15.93 and the ATR was 15.9. So it moved 100% the ATR. It exactly moved the ATR for the day, which is amazing, right? So this indicator, DTR versus ATR, knowing the average true range of a stock and then marking your levels according to the range of that stock on a high volume breakout. These all the things are very important in order for you to capitalize on a trade like this. So now let's take a look at my entries and exits. And before that, let's take a look at the Discord group as well. So in the Discord group, in my daily game plan, I mentioned that 5th of December, I was only watching Tesla, guys. Only one stock in the game plan. That is amazing because I just wanted to focus on Tesla. It's a daily range breakout. It's my playbook setup, daily range breakout. It's opening near my entry criteria, open exception. I don't want to bother watching any other stock. These are the trades I live for, and that's why I was only watching Tesla on this day. And even in the chat, you guys can see quite a few setups, including Nvidia, Microsoft, etc. But I will personally just focus on Tesla as it's a clear range breakout or maybe a rejection from 360, but ideally looking for a breakout. Rest all are just continuation plays like Nvidia, Microsoft, and all these stocks. I just want to focus on Tesla. After that, we had the webinar. I explained the same thing in the pre-market webinar, my risk management strategy and what to look for on the tape, everything. And then, yeah, right at 6:33, which is 9:33 a.m., this member had a big day. This member was able to make good amount of money on Tesla again. And then what a remarkable instinct, Jay. Yeah, so again, Tesla was hard to trade. Yes, it just went off the open. But as per my playbook, I have an entry criteria called open exception. And that's why I entered right off the market open. And then, yes, same up nicely. This member made $1,700, which is 15% of his account. On a 13K account, he made $1,700 within the first 3 minutes. This member was really quick. He exited within the first 3 minutes of the market open. I held this trade for like 20-25 minutes. But yeah, 3 minutes. I just went in on Jay's instinct on the second minute candle itself, holding 50%, right? That's what I mentioned in the pre-market webinar as well. And here's my entry, guys. You guys can see I entered 365 calls, 100 contracts at 9:30 a.m., 20 seconds, 4.17. So now let's take a look at my TradeZilla and where I actually exited. So here's my TradeZilla on this trade. I'm going to just mark it down in front of you guys. So if we look at the executions, my first entry was 100 contracts, 4.17. First exit, 20 contracts. I actually took 20 contracts out and then I took a bit more. So yeah, 5.87, 6.10. You guys can see all my exits right here. So yeah, I mean, on this trade overall, my investment was $41,700. I made $32,000, which is 77% approximately return. My stop loss was basically 3.6 on the premiums because my entry was 4.17. So as I mentioned, my risk was $5,700 and I made overall how much? $32,000, which is a 5.62 R. So now the setup, if you look at the playbook, this playbook was a daily range breakout. You guys can see I have a playbook, daily range breakout. And if I look at the setup, it's going to be an open exception. You guys can see I have the entry criteria right here, open exception. So yeah, good playbook setup, good entry criteria right here. My risk was say $6,000 and I made $32,000. And that's why I said you need to size up on trades like these. So what I mean by you need to size up on trades like these, I actually posted on my X, on my Twitter as well. The link will be in the description box below. That gurus who tell you to risk 1% of your account every single day, you can't be consistent like that. I trade for these kind of setups. So if you ask me that, okay, if I look at any other setup, let's take an example of any other setup, say Tesla on maybe any other day, maybe like 1 second, if you go back, yeah, so Tesla maybe on this day basically, right? So we had a huge push towards the upside. This stock is extended. So yeah, it's still a decent setup, but not a playbook setup. We don't have a daily range breakout. It's just going with the momentum, going with the flow. So I don't have a clear level where to enter. I don't have a clear level where to exit. So this is not a playbook setup for me. So if I'm risking 1% of my account on this day and risking 1% of my account on this day, it doesn't make sense. I also made a video on my risk management strategy. I'm going to link that video towards the end of this video. You guys can watch that video, my personal risk management strategy and how I size up on these playbook setups and how I size down on the non-playbook setups. And that's what the pro traders do. They know when to size up, when to go aggressive, and when to size down, when to be defensive. And that's why I don't agree with risking 1% or 2% or 5% of your account on any given trade. On trades like these, I want to go all in. Like even if I lose a bit of money, it's okay. The risk to reward was 5 to 6 hours. On trades like these, I want to size up. I can't be a trader by just risking 1% on all the setups. That's not how it works. So yeah, that's it guys. Hopefully you liked this video. If you did, give this video a thumbs up. Subscribe to my channel for a lot more content on day trading. If you don't follow me on Instagram, the link will be in the description box below. If I'm not able to make a video, I actually post a recap on my Instagram as well. It's free, so that is a must follow. Thank you for watching, and I will see you guys in the next one.